Hey traders, welcome to another global macro update. In this video, we'll mainly be going over precious metals. First, looking at some historical data, looking at 100-year historical charts of gold, silver, and some different ratios we'll get into. And then we'll dive into some smaller time frames, looking at weekly, daily, 4-hour charts for gold, silver, and the gold and silver ratio. So first things first, let's quickly just go over the price of gold in the last 100 years, roughly. This dates back all the way to 1915, and we can see we've had really three major pumps in this 100-year span. First one we can see was post 1929 Great Depression. We can see really started at the start of the Great Depression, and it went from around $300 up to $670, $680. And then the second one was when we had a big worry of inflation, and there was significant inflation within the United States, which kind of started in 1971 and ended in 1980, where gold went from sub $250 all the way to $2,000. And then we had a bear market where we fell from that all the way to the lows of 2000 when gold hit 300 and around $85, $86. And that was where equities and the tech boom in the United States had a lot of capital flow into it, and that was, you can definitely see it within the S&P 500 to gold ratio chart, which we'll get into later. And then since 2000, 2004, 5, and onwards, especially when we hit 2008, gold really took a huge rise because there was worry of inflation due to QE. After some massive pumps, we had to get some level of a consolidation. So then from around 2012, 2013 until we got the bullish move breakout in 2019, it was in a long drawn out consolidation we will look at in TradingView. But overall, it does look like we are bottoming out here, and we'll get into that within the smaller time frame chart. But on the larger time frame, just on a macro sense, we have so much more US dollars in the pool that is compared to the ounces that are created for dollars. So obviously we all know that there is significant money printing occurring not just in the United States Central Bank and the Federal Reserve, but also other central banks around the world. And when you're comparing gold to currency, it's not just the value of gold, but if you're adding substantially more United States dollars or whatever currency into the pool and then comparing what's the value of this asset compared to this new pool of currency, if you're going to have substantially more amounts of currency, even if the value doesn't theoretically change, the worth in dollars or whatever currency you're using will change due to the fact that you're diluting the current dollars in circulation. So it's not just the value of gold and I guess the value of equities or cryptocurrencies, but it's also the debasement of currency that you are having to worry about as well. So that's going to be the gold chart at the 100-year mark. Very significant. We see three main pushes, and I do think that we could see the next one here with the worry of inflation. We'll talk about CPI numbers in another video. Next thing we're going to go over is silver. We can see that this dates all the way back to 1915 as well, and we can see that we've had a massive pump back in late 70s when we had that inflation worry, and then we've had a significant move sort of in confluence with gold in the early 2000s, and then it kind of peaked around 2012, and it's been falling ever since. But we can see that it does look like we are basing, and we can see I kind of view this section right here, if we look at this zone where we had the significant move to the upside, and now we're getting a consolidation where, in my opinion, it is looking like we're forming a falling wedge potentially, where we're able to hold a solid level of support at around $15, and we'll look at the monthly chart on TradingView. But in my opinion, that looks very similar to this era before that massive move to the upside. So we've had a significant push to the upside. We're creating a level of lower lows and lower highs, but we're able to hold a base of around $18 and let's say 50 cents, and then we stop the lower lows. We are able to hold a support, and then once we see the market structure shift and the break in price action of this falling wedge, I think that we could get something like, maybe not as aggressive as this, but definitely something where we're able to see a significant move to the upside due to the worry of inflation, due to the proliferation of not just the United States dollar, but many currencies around the globe. So that's going to be my thesis for the precious metals. And also cryptocurrencies are going to be in there as well, but that is for another video. Next thing we're going to be going over is the gold to silver ratio, which it is the highest point at really in the last 100 years. This also dates back to 1915, and we can see the previous time it was around those levels was around September 1990, when it was about the low of the precious metals before we saw that big boom. Remember, in the early 2000s, both gold and silver were very low, and then they had their huge move to the upside. So that was one peak, and the other peak was around 1941. So if we go back to 1941 right here, around 1941, so nothing really spectacular in gold. And let's just look at silver. 1941, it was at a low of a silver move to the upside, so that definitely shows us it makes sense. But in terms of the actual aggressiveness and move to the upside, this is the highest point we've ever been in over 100 years. So in my personal belief, we have seen it come back after it's made aggressive highs, and the further it goes on one extreme, the faster it'll snap back eventually. And this has lasted over thousands and thousands of years. Not just gold, but both gold and silver as a relationship have been a form of a financial asset and investment for thousands of years. So it's definitely something that is going to be lasting for a very long time, in my opinion, and could be an opportunity that could provide some great lucrative risk-reward parameters. So in terms of the scope of what we're looking at, I do think that silver could yield us a more appreciating asset and a more volatile move to the upside, because we have seen that silver does spike extremely aggressively when it does move to the upside. Gold does as well, but silver, we can see, definitely has a lot more volatility that does tend to push the price a little bit more aggressive when we do see those massive bullish parabolic moves. So the last thing we're going to look at is the S&P 500 to gold ratio. So this is how many ounces of gold it takes to buy the S&P. We can see it's around 1.66 right now, 1.7, and the last time we were here was, let's say, the longest time was around 1960. And the peak of the equity to gold ratio, when you should have been the highest point of equity, lowest point of gold, was around 2000s in the tech boom, and then the lowest point was around 1980s when we had worries of inflation. So we can see when people are worried about inflation, when you see CPI numbers go up and the cost of goods and services, and it's targeted inflation at the things that everyday individuals are buying. If inflation is occurring in financial assets like post-2009 financial crisis, where we saw inflation in just basically financial instruments like real estate, stocks, cryptocurrencies, anything that will make the rich richer, that sort of inflation is positive. But when it's on goods and services and everyday needs for individuals, then it becomes a worry, especially when the actual salary of the everyday individual is not increasing. Obviously, that was a squeeze on families, people in that country, in that community. So that's not what you want for inflation. That creates wars, riots, and angry people, which totally makes sense. So we're now going to go to the charts. We're going to go to TradingView. Let's just move this aside. This first chart is the macro monthly chart of gold. We can see that was the lows of 2000, and then we had that huge bullish push from sub $300 all the way to around 1900, and then we had that long drawn out consolidation for around 5-6 years, and we did draw in this ascending trend line that's connecting the higher lows. That was giving the base a lot of, in my opinion, a really positive outlook in terms of a bullish case if it did push to the upside above the $1,400 level resistance, which it did, which was a very significant move that really had a lot of people in the gold sector excited, which totally makes sense. And it was pretty well in confluence with kind of the starting of, in my opinion, the financial breakdown that is occurring right now. Even before 2020, we saw countries with negative interest rates. We saw repo operations because banks were not able to have enough liquidity. You know, you saw cracks and investors go to gold in times of turmoil, in times of worry about inflation, because people know after the financial crisis, central banks will print as much money as they need in order to solve their problems due to the Keynesian economists that run the monetary and fiscal policies down in Washington. So yeah, my personal belief is they will not stop, so that's a very bullish case for gold and silver. So we're going to go dive into the smaller time frames here. Just wanted to show you the large time frame. We broke out of the $1,400 zone. We got a nice pullback after hitting a key level of resistance at 1550. We'll get into the nice continuation pattern that occurred there, and then we got a massive move to the upside, and then soon after that we got that liquidity event where basically assets across the board, every single asset almost, took a huge nosedive. You saw crypto, you saw all stocks, indexes, gold, silver, oil, everything plummet. And that obviously was a situation that shook out a lot of people, but we did break above that, and now we are retesting that previous high, which we'll get into. So the main level that we are looking at for a next level of resistance is around 1785 to 1800, and we can see we tested this zone 3 times with wick just touching this zone, 1, 2, 3, and that's why we're aiming at that zone for the next area where we could see some resistance. So now let's dive into this bullish push that occurred after breaking the $1,400 level. That was a ceiling for this volume accumulation phase for the long-term price action of gold. All right, so this is the daily chart. Let's first go over the continuation pattern really quickly. We saw a descending triangle, which unfortunately, it was a little bit tricky because we can see you could have drawn it like here, which would have been a potential move to the upside, but it did get stuffed, unable to make a higher high than the previous major resistance that we saw right here. So it did get rejected, moved to the downside. We did have an ascending zone that squeezed the price closer to the apex. When it did push to the downside, it actually didn't go all the way back to the main $1,400 level. It did get stuffed, in my opinion, from the buyers, and it made a series of higher lows that squeezed the price yet again, so it made a second attempt. This is a very similar pattern to what we saw right here, except this time it had a little bit more resistance at around the 1490 range, but it did squeeze up. It broke the descending resistance that was able to keep the price making lower highs, and then once it was able to push above the 1490 range, 1495, that definitely, that big gap there, we can see that there was a lot of buyers wanting to enter at that point, and then we got a huge bullish move that pushed the price up around 6-7%. 11%, 12%, yeah, that was a significant move. I think it was 6-7% to the first high there. And then that was that huge liquidity event that occurred on all asset classes that pushed the price all the way back down to the low of that previous correction before the major market move. But definitely buyers picked it right back up to actually push it above the previous high. And we can see that on the weekly, it's a very clean previous level of resistance, new level of support, where we see wicks, and then a candle closure right at that zone validating it, and then we see that it broke above it, made a higher high, and now we see it respecting this previous resistance as a new level of support with lots of wicks to the downside, indicating that there's sell pressure within the market. So let's just take our snip right here. We see that almost all candle closures after we had that bullish move confirming that bulls are now in confidence and have more of the weight in the market. We see that the candles closed here, but the wick came all the way down. So the sellers were trying to push the price down below this support zone, but the buyers were saying, no, I'm able to hold you up. I want to get in. I'm wanting to enter at this low. So the buyers were able to push the price back up to this zone above this level of support, indicating that the buy pressure is still strong. And we also see that here. Also, this is a doji where you see a wick both to the top side and bottom side, which is an indecision in the market. I totally don't mind which fits in very well with our thesis that this is a squeeze occurring in the market, because squeezes are indecisions. You're waiting for the price to make a decision to either move to the upside, to the downside, by breaking the either resistance or support. In my view, it's a confidence of the sellers and confidence of the buyers. So when the confidence gets broken, you have a potential shift in trend. And I think that's what we see right now. So let's dive into the smaller time frames here, looking at the 4 hour of this squeeze. So we already talked about the daily and the weekly. Now this is just looking at the small time frames here, the 4 hour. Let's look at the squeeze that we saw initially on the weekly and the daily, and we'll get into this support right here, previous resistance, and this squeeze that is occurring. All right, so this line is the previous resistance that is now going to be acting as a nice level of support. And this is that triangle. It's called a symmetrical triangle. You have the anchor point. We have first touch, second touch, third touch, fourth touch. And then you have from the anchor point for the support, 1, 2, 3, 4. So it's a very well-respected symmetrical triangle. And then you've got your massive bullish engulfing candle that is engulfing really many days, or many hours at least, of price action. So for any shorts in the market, they're going to get spooked by this for sure, because you see the previous high got broken for the market structure, where you see this high, this high, this high, and this high all got broken. So the market structure has made a higher high. We could be looking for a higher low. I don't mind. That higher low would probably be looking to get validated with this new support by the previous resistance, which is going to be around the 1719, 1720 mark. But overall, the price made a significant break to the upside, indicating that the confidence from the sellers got broken and the confidence from the buyers pushed the price up. We could get an exhaustive move, which is very normal, but at the end of the day, we are looking to see the bulls push the price above, making a series of higher highs and higher lows, making strong impulse moves with some significant buy volume coming into the market. And that's going to be our view of gold. Let's look at silver, because silver, our view is a similar thing. We actually are more bullish on silver than on gold, because we'll look at the gold and silver ratio before we look at silver. So we already talked about the 100-year chart. Now this is the monthly. We did have a nice ascending wedge that had a move to the upside, surprisingly, that actually kind of had a blow off top that pushed the price way above any historical ratio that I've seen. And we're now consolidating at that zone. I do think we could get a reversal here, because on the smaller time frames, it does look like we've failed to try to attempt to hit that high again, and we'll look at that very shortly. But overall, we just want to understand that if it does have a significant move to the downside, it's going to be extremely bullish for silver. All right, so let's now look at the daily. Just really quickly, we had the huge move to the upside, and then what I saw was a potential reverse head and shoulders that appeared right there. Maybe you can see it. It's just this zone right here. That is the left shoulder, right shoulder head, and then this was the breakout point right here at around 115. Maybe you can see it. I'm just going to draw that in just to make sure. You had the left shoulder, you had the head, and then you had the right shoulder, and it was right at the breakout point, which was the neckline, which was right here, and it was unable to make that higher high, higher low, and then that would potentially create another high where you'd test the previous all-time high, because it was such an extreme that took place, unfortunately, or fortunately, depending on if you want gold or silver to go up. It didn't actually break to the upside, which invalidated this structure with this price action formation, because of the fact that it broke below this right shoulder. When it breaks below the right shoulder, or well, I guess either way, right shoulder, you would have to basically invalidate any form of a head and shoulders, because then this is not a valid price action structure anymore. So now what do? We now just drop this down, and now I'm just looking at the market in a consolidation. It could potentially create some lower low where you get a wedge forming or something along the lines of that. Like if you get something like this, where you maybe form a wedge, and then you can get like another pattern where you get a move back to the upside where it's 124. But in the in the short term, I do think that it's a little bit more bullish for silver than gold because of the fact that the gold and silver ratio failed to make a move and break above the 115 zone, and it failed to break and complete the reverse head and shoulders. And we can see that this was another setup as well, this ascending trend line. This could be, you could call that ascending triangle, but that also didn't form as well. That broke to the downside. Definitely a lot of sell pressure after we got that move to the downside. So we are seeing a bearish engulfing candle, not significant, show up at the support zone. But if it does break down below, I think we could see a potential low. I think if we are looking for some level of a lower low to hold, I would be looking at some pattern where we could see a wedge of some sorts, and that would be the only bullish case. If it continues to go down, then we could assume that this actually could be shifting, where the weekly chart ascending wedge could actually be even tested and even actually broken, and that would be an extremely bullish case for silver. So now that we understand our case for why we think silver is a little bit more bullish than gold right now, let's go and look at silver, because this is definitely going to be important to understand. First things first, this monthly chart is extremely, in my opinion, bullish in the fact that we can see right here, this candle actually left a huge wick to the downside at a very significant level on the chart, which is around $15. So we can see initially when we had that, let's just zoom back a little bit further so we can see that bullish push that occurred. The parabolic bull run that occurred. It wasn't a bullish push. Okay, it was a massive move to the upside. So that was that massive move to the upside. And then we saw a series of lower lows and lower highs. And then you start to see less aggression from the sellers. The sellers start weakening. And then you see, yes, you see a low, lower low, lower low, lower low. And then you see a bit of a move up. And then you see a base start to form, right? Where you're not getting a lower low to form. You're able to hold the $15 zone right here initially. Very strong, and then we got to move to the upside. You're able to hold that zone yet again, and then you get to move to the upside because it's a squeeze. This is a descending wedge, and then you get to squeeze up. This is a, you could call it a descending triangle, which initially failed but actually was able to push back, or you can call it a wedge, which broke to the upside but is a squeeze that ended up pushing to the upside yet again. So you got your first one here, you got your second one here, and then now, in my opinion, you're able to hold this zone. You've held it once, twice, and now you've held it for a third time. That's going to give you enough validity that this $15 range is a very significant zone, and I think that we could get some level of a resistance when we do have the price hit this descending zone for a potential last squeeze before we actually get a move to the upside. But in terms of in the next week or handful of days, I think that we could get a move to the upside here because we just recently hit that support, and we can see it was never that aggressive. And because we've rallied so far back up from the low of like sub $12, $11.80 or something, the bullish pressure is there. People are looking to get in it because it's very undervalued. They're looking at the gold and silver ratio like we do, and we can see that the buyers are definitely picking it up, and the closest next key level of resistance is still a decent ways away. It's around $17, $16.80, and we're currently at around $15.83. So there's definitely a lot of room to go. Let's now put on our charts and go on the daily chart. So this is that massive liquidity event that occurred, and then this was that $15 range that was holding. So let's go back to the weekly here really quickly, and it was $14 was what held, but the $15 range right around here was the major level that we wanted to see hold. And not only did we hold it, but we broke above it. We tested as a nice level of support multiple times with wicks protruding to the downside from the bodies, showing that there is bullish pressure that's able to push the price back up above the zone, shows us that there is bullish pressure. If we actually zoom in from the weekly to the smaller time frames, we can see that this, in my opinion, is a nice bullish flag, a continuation pattern, a descending wedge that has nice, valid, descending trend lines that are connecting a series of lower lows and lower highs in a nice consolidation phase, which you could call a reaccumulation phase after the massive sell-off occurred. And now we're testing to see if we can actually break the next potential squeeze, which would be like somewhere along the line of here. We don't exactly know, but I think we got a decent amount of room here. Like I said, $16.50, $17 around there would be the next key level of resistance that we're looking for. So now let's zoom into the 6 hour to get a good understanding of what we're doing here within the smaller time frame. So we kind of have a good understanding of what the structure is, but to go over it, we had a massive sell-off. We had an initial move to the upside. We did have a little bit of a nice consolidation where we could have entered, but I was a little bit worried of this $15, $14 range right around here. This was, in my opinion, kind of a worrying zone because it's still a potential massive level of resistance that could have came unless the monthly closed, and we're able to close at around the $15 zone, so I was very pleased to see that. Once that monthly closed and we're able to hold above this zone, I was looking for continuation patterns possibly to the upside because we're able to come back up and close right at that support zone, definitely signifying that bullish pressure is present. We got a nice anchor point here for first descending trend line, creating our resistance. We got first touch, second touch, and third touch, creating a nice descending resistance for us to break. And then we got our anchor point, which has the support right here for our anchor. And then we see 1, 2, 3 as an anchor as well, creating our squeeze, and then we see a little midpoint here, just identifying the middle of our descending wedge. Now, once we broke this descending wedge to the upside, breaking the resistance, we were able to also break the market structure high as well, which tested once, twice, 3 times, 4 times. We're able to break this high, which also shifts the market structure. So not only did we break the price action, which was the wedge, we also broke the market structure on the large time frame, which is very significant. So you're looking at 4 hour, 6 hour daily time frames. You want to see market structure break, which is a series of either higher highs and higher lows, or if you're in a consolidation, you want to see that break of a higher high and test of that higher low. You can see right here, resistance, 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 new level of support that's able to hold really, really well. So that's showing you that there's a lot of buy pressure within the market, able to hold the price up, able to sustain confidence for a long duration of time. And once you get that bullish engulfing candle to push the price up, that's engulfing all the previous price action in that consolidation, that's an extremely, extremely bullish case for whatever you're trading, in my personal belief. So I'm more bullish on silver than I am on gold in the short term, as long as this kind of continues to go to the downside. If it breaks the support, I'll be very bullish on silver. I'll still be bullish on gold, but I'll be more bullish on silver. And if we're able to hold, you can get a little bit of consolidation, some level of a squeeze that'll either get you to the upside or bring you to the downside to form a possible descending wedge. This is very invalidated of a structure right now. We only really have 2 points so far. So in my personal belief, I'd like to see at least 3 or more to really give me some level of a validation and dependability for that structure. So that's going to be the video for today. We really hope you enjoyed it. If you have any questions, drop a comment in the comment section below. If you found it educational, entertaining, anything in between, it'd be great if you'd subscribe to get more videos like this. Hopefully you are having a good trading week. It's almost coming to an end, and we wish you the best in this difficult time. So until next time, have a good one, traders.